Good evening, and you're all very welcome to this Transferring the Family Farm webinar hosted by Teagasc. My name is Kevin Conley and I work as part of the Teagasc Farm Management team, and I will be chairing this evening's event. This webinar has been shown on Zoom and it'll also be streamed on YouTube. This event is a follow-on from last week's talk on the importance of family conversations around farm transfer and the role of mediation in that process, which was delivered by Claire O'Keefe. And we also had a look last week at the topic of wills and probate with Emma Fogarty presenting. And the recording of that webinar from last week covering those two topics is available on the Teagasc YouTube channel, as indeed is last year's webinar, which dealt with the topics of succession and farm transfer planning, main taxes on farm transfer, and using a partnership in the succession process. This evening's webinar is also being recorded and will be available on YouTube after we conclude here tonight. Before we go any further, I'd just like to acknowledge some Teagasc people who are assisting in tonight's event. Barry Caslan, who's behind the scenes and is keeping reins on the technology. And I'd also like to acknowledge Eric Donald and Alison Maloney for their assistance in getting the word out about this year's webinar. Indeed, our colleagues across the Teagasc organisation for pushing the word out about tonight's event. And also many thanks to James McDonald, who's been instrumental in getting this evening's event organised. And James is going to be talking to us at halftime, and I'll also be chipping in at the end with the questions to our speaker. And just in relation to the questions, please use the Q&A function if you're watching on Zoom to submit your question at any stage. And keep in mind that the questions are kept private. It'll only be seen by the speaker and ourselves. And if you happen to be watching on YouTube, you can contribute your question via the dedicated Teagasc email address, succession@teagasc.ie. We'll endeavour to put as many of the questions as possible to our speaker tonight. We might not get through them all, but please try and keep to the two topics that we're going to cover tonight. Don't stray into the areas of mediation and wills and taxes. We got quite a few questions on those topics, obviously last week, and we want to try and keep the topics specific to tonight's event. And due to the complex nature of succession queries, it also might not be possible to deal with all the questions. But anything we don't get through tonight, if there's an email address comes in or contact details, we'll try and get back to those people, or as many of them as we can. For this evening, we're going to focus on two very particular areas. First topic is the whole area of the Nursing Home Support Scheme, otherwise known as the Fair Deal Scheme. And this particular topic always generates an awful lot of questions, has done over the last number of years in our succession clinics. And we're also going to look at in a separate talk on the whole area of state pension supports and other qualifying criteria for other supports that are available from the state. So who's going to be talking to us about this? Just to give an introduction to Deborah Dwyer. Deborah is a development manager with the Citizens Information Service in County Westmeath. She is responsible for the coordination of a national project called Request a Callback, which allows customers to get in touch through the the excellent Citizens Information website, and they can get a specific callback in relation to their query from a contact from within the Citizens Information team. Deborah is an MBA and is a trained mediator and is registered with the Mediation Institute of Ireland. And I'd say that comes in pretty handy with her job. But like last week's two speakers, she's had a bit of involvement with us in previous events that we've held in Transferring the Farm. I think she was at one of our clinics in Athlone a number of years ago. And from memory, as is the case in nearly in every clinic that we have, where we have citizens information people there, they tend to be one of the busiest groups kind of dealing with queries. So they have an awful lot of knowledge in this area and are quite willing to share it with farm families. So Deborah, you have great expertise. We're going to hand it over to you and let you share some of that with us tonight. Thanks.
Thank you, Kevin. Mediation comes in well with my two sisters as well, I should offer up. I'm just going to share screen now. And we will start working our way through it. Okay. So I'm here to talk to you around the Nursing Home Support Scheme, which is more commonly referred to as the Fair Deal Scheme. And that's a scheme that's run by the HSE, and it is there to provide financial support to people who need long-term nursing home care. It does not cover any short-term nursing home care. When we talk about Fair Deal, internally in citizens information, we always say it's like the perfect storm, because it is where emotional anxiety and financial concerns and worries tend to come and in a crash together. People are very concerned about when a loved one is ill. They're also very worried about how are they going to pay for the cost of the care and what care options are available to their loved one. So anyone who is ordinarily resident in the state and needs long-term care can make an application for Fair Deal. When you make that application, the HSE are going to do an assessment. If you are short of the contribution cost for your care, the HSE pay the balance. That's it in a nutshell. However, to make the application, you need to go through a couple of steps. Everybody needs to do the first two steps. One is that you need to have a care need assessment completed, and that means that it will be done by somebody appointed by the HSE who is a medical from the medical profession, and they may do it either in a hospital or in a doctor's surgery, or as they may even do a home visit. The second part is that you will go through a very thorough, comprehensive financial assessment. And that financial assessment looks at your income and assets, and it works out what's coming in, what you have, and what you have the capacity to pay for. So we will look at a little of those two now. And the third part then is just to say to you that there is an option for a nursing home loan. That is where if you want to defer the cost of paying for your contribution to a later date. But we'll come back to that piece because we'll focus on the two key steps first. What I would say is that where an individual's assessed weekly contribution is greater than the cost of care, then that's not going to allow them to qualify. And also that the capital value of an individual's private principal residence is only included in the financial assessment for the first 3 years. We commonly refer to that as capping on the family home. There is an unqualified 3-year cap for those that are in the farming sector and agriculture sector that applies to productive assets, such as farms and businesses. But there is a qualifying condition with that. And I know this has been a hugely emotive issue for farm families and businesses and owners in the community. And there is changes afoot around this whole area as well. So what is happening on the changes is that the Nursing Home Support Scheme Amendment Bill has been passed through the Oireachtas, has been signed by the President of Ireland, and is due to commence later this month, 20th of October. And it has amendments in it. And the Act itself is quite complicated. I haven't included it here, but at the end of the presentation, I have included a link for those of you that are curious to check it out and read the Act in full. But what it does say is that the Nursing Home Support Scheme to protect family farms and business from nursing home care costs, where there's a commitment to succeed with the family or the farm business for 6 years. The qualifying condition with that is that you must have suffered a sudden illness or disability. You or the partner run the farm or business. There's a succession plan put in place, and that you meet all of those conditions. And I'm familiar with the information on the Teagasc website, which has a lot of good leaflets and instruction around this area for you to follow. Back on the application process, when you apply, your care need is the first part that needs to be established. And if you don't pass the care need, then you won't progress into the financial assessment. So on the care need, your ability to carry out your activities for day-to-day living. So can you get up, do your personal hygiene, take care of your medication, get dressed, get up, move around, maybe go out and do shopping and be as independent as possible. These are the kind of things that the healthcare professional is going to check out for you. They are going to see what state of affairs you have, what the condition you are in, what medication you take, and they will also consult you with around your wishes and preference. When they've all of that information gathered, they will produce a report, and that report will issue to you within 10 working days. And that report will say, yes, you have a need for long-term nursing home care, or no, you don't. They also reserve the right to use that report, which we'll look at later, for other care needs that may be available to you, either in the nursing home or in the community. What they do say to you also is that if you experience a change in circumstance, and that could be something from a change of address, or maybe something as big as a change of income or a change of health, or it could be that you have sold an asset, or maybe you've had a legal separation, or maybe a spouse has now deceased, or maybe you've received some kind of compensation money, or there's a change in rental income if you're letting out a farm or a field or something like that. Any change in circumstance, the onus is on you to notify the HSE. Again, they will expect you to do that within 10 working days. On the financial assessment side of it, what they're looking for there is to see how much can you contribute without putting your family or your partner into jeopardy. But they will check all assets. Assets include everything from savings and property to weekly income that is coming into the household, and it is the household that they look at. So an asset is any material property or wealth, and a non-cash asset then may include something else like a holiday home that you have. And then on the earnings side of it, it includes everything from any wages or salaries, any state pension that you might get, any other social welfare benefits or allowances that you may have, any rental income, or any source of income that you get. Maybe you're a director in a company or something like that, or you get travel and subsistence if you're in a voluntary directorship. And what they do is that they take a look at all of that. They work out your contribution to care, and they will tell you in their report what they deem that contribution level to be at. So say, for example, your cost of care is €1,000 a week, and they determine that you can contribute €300 a week. Then the shortfall is going to be €700 a week, and that is what is going to be under the Fair Deal scheme for you. But your contribution will be made up of 80% of your income, and then 7.5% of the value of the assets that you have. That 80% includes things like I just said, like your state pension. They do allow for deductions and disregards. So the first 36,000 of your assets, if you are single, or 72,000 if you are a couple, will not be counted in the financial statement. Again, if you are part of a couple, you will contribute half the amounts that I just referenced. So the 80% and the 7.5% will now become 40% and 3.75%. They are specific around the deductions which they allow. For example, if you have a second home or some health expenses, or if you're in receipt of maintenance, they have notation in their booklets around what is allowed and disregarded. I mentioned the family home. That is capped after the first 3 years. So at 7.5% per year, that brings it to 22.5%. And that capping is irregardless of how long you stay in the nursing home getting long-term nursing care. In the case of a couple where one partner or spouse remains in the home, then that capping is changed to 11.25%. With regards to transferring the family farm, a key aim is to have an open conversation. I suppose it was already referenced last week that there was a piece around succession planning, and just to re-emphasize that, because it takes quite some time to engage in this process and gather up all the paperwork. And the hardest part is in starting the conversation and determining who should be in the first stages of the conversation before it's opened up to everybody else. But some things you need to address is having the conversation, making sure you plan for your retirement. On Monday, I did a presentation with some Teagasc staff members, and I was explaining my own parents retired at 65. They're in their 80s now. They never expected to have this length of time in retirement. And while we really appreciate it, it requires them to continue to make plans. I also say that you should have the conversation because nobody wants to plan for somebody becoming ill in the family, and nobody wants to have to start thinking about what do you do if you have a farm or a business and somebody experiences a sudden illness. Farmers will be eligible for a proposed new fair deal scheme once a successor is in place, has been involved in the farm for 3 of the previous 5 years, and agrees to farm the land for the 6 subsequent years. That is what is coming in under the new amended Act at the end of this month. There are safeguards built into the whole financial assessment. That makes it safe so that nobody would pay more than the actual cost of care. You get to keep 20% of your personal allowance or income, such as the state pension. If you have a spouse or partner remaining at home, they're left with 50% of the couple's income. And just to say that under the legislation, a couple is defined as a married couple who are living together. If you sell your home, farm or business before or after the 3-year cap has expired, then that asset is now subject to the financial assessment, and you must make a declaration to the HSE with that regard. This table I have taken directly off the Citizens Information website. It's just telling you what is the asset, what is the cap on it, what is the percentage per year, and does it impact the option to take up the nursing home loan. Throughout the whole fair deal process, there are appeals and reviews built in. So if you believe that the HSE has found unfairly that you are not entitled to the long-term nursing home as part of the care need, or that you have been assessed too high as part of the financial assessment, their correspondence to you will indicate how you can make an appeal. What I would suggest to you around that is that the appeal should be made in writing. That way you're generating a record. The second thing you should do is that you should have evidence included with it. So if you have statements of bank accounts or credit unions, or maybe something has been devalued in price, then you get a new statement by a suitable professional. Likewise, if your care need has changed and maybe you were recently diagnosed with something and now you find that you have impact from the medication, or that you find that your capacity on a daily basis is being challenged and it wasn't initially, all of that material you document and vouch for it and you send into the HSE. Every so often the HSE will actually be satisfied to conduct a review, and particularly on the care side of it, and that will be done in conjunction with a registered medical practitioner. So it's not sufficient for you to document a daily diary to say, well, this is the impact this condition is having on my life. You actually need to have it done with somebody who is medically qualified. So the next piece that I said was at the beginning was that the step 3 is around a nursing home loan, and just to explain to you what that is. So that is separate to getting the care need or the financial need assessment done. Once you're approved for the fair deal, you can apply to defer the part of paying your contribution until later. And later tends to be until you either pass away and you take it out of the estate before the will is read and goes through probate and is allocated out, or maybe you have some winnings or a compensation or savings due to mature, and that you know that in 2 years' time you would be better placed to do it, or some other factor like that. Anyways, what you're trying to do is make a deferral on it. And they have periods of time that you can apply for the loan, and that means that you're drawing down based on collateral, and then you must provide written consent for the family members involved in the family home to say that everybody is in agreement with this, and a charging order then is registered against the asset that you're drawing down as that collateral. It's like a type of mortgage, and once you consent, then you don't need to do anything else except keep up to date with your correspondence with the HSE. And if you, as a person that goes into the nursing home, suddenly no longer has personal capacity, then you will need to have an agent or somebody in the family member who has power of attorney or who can be put in place to act on your behalf. What you need to know around doing this is that everybody signs up to it, and there is a formal document with it, and that is registered. This just tells you here that it has to be repaid, how you repay it, and where you repay it. And in this case, it is repaid back to revenue. On the care need assessment, I said at the beginning of the presentation that sometimes the HSE use that care needs to identify maybe other services that you could avail of. Those services are looking at what used to be called the home help or home care package. And these are services where you have somebody that come and visit you on a daily or weekly basis. And this allows you to remain in your home with a quality of life for as long as possible. This tends to happen when it is somebody who has expressed a wish to do so. And it is also kind of used as a stepping stone for having the conversation of somebody having to move into nursing home care for long-term care. Having to come to grips with maybe an acquired illness or condition is difficult enough and emotional enough for everybody. And typically as the patient, you want to stay in your own home for as long as possible, and you're in maybe a little bit of denial around what is facing you with your condition, or you are not as incapacitated as expected, or that might come further down the road. So for those reasons, you would have some kind of home care package. It allows you to come to terms with, as a patient, you might come to terms and say, look, I cannot do all that I thought I could do. And it allows for family members to have that conversation with you. How do you think you're doing? And are you ready now to have some kind of care need assessment completed? The home help hours, they do help with a bed and bathing and dressing and maybe taking medication. They are not there for things like housework or light household duties. So just to distinguish that for you. There are other supports that might be available. For example, consumer-directed home support that allows you to arrange for that kind of home care to come through a private service provider external to the HSE. And there may also be some community-based services through the district or public health nurse in your local health office that could be available as well. That would be worth checking out through your local health centre. There is great support and information available through the HSE themselves. They have their own information line open Monday to Friday, 9 to 5. The numbers are there on screen for you. They also have a nursing home support scheme booklet, and they also have a standardized guidelines around the home support scheme that are available. To get a copy of the application form, which is quite detailed application form, you can contact your local Citizens Information Centre. They can post out a copy. Not all Citizens Information Centres have fully reopened yet. They're appointment based due to COVID. But you could also go onto our website and download it from citizensinformation.ie. If you put in the search bar Fair Deal, or you can go on to the Teagasc website, or you can go directly onto the HSE website. There are nursing home support offices around every county, or a couple of counties tied together. So because I'm Westmeath based, I just looked what was instantly around me. And the Longford and Westmeath one is based in Mullingar, on the Longford Road in Mullingar in the health centre, and that's their telephone number there. And then the Laois and Offaly one is based in Tullamore, and they have a number of telephone numbers that are available there as well. One of the things that was asked on Monday when I was talking to the Teagasc staff was, when do you start this conversation? And inside in Citizens Information, we always say, when we're out doing community talks, making a will won't kill you. It allows you to start a conversation and put in place what you want to say over who inherits part of your estate, or how you would like things done. But as soon as there's other generations around, or as soon as you turn around and say to somebody else in the family, one day all of this is yours, you've already made a promise. So that's the best time to start this whole conversation. We have a really good form, just when I mentioned wills there, about where my possessions are kept on our website. But I would caution there, when you're writing things down like that, never put down any pins or passwords, particularly as we're bombarded with fraudulent scams and phishing tactics presently. And then when you're considering your succession plan, I know this was covered last week, but there are things that you need to remember, not just about the business, but consider the family. Not just about the family, but consider what legal landscape you're operating within. Be mindful around taxes. Make sure that you are planning properly for a full retirement. So I think on the fair deal piece, that is as much as I had covered. The rest is really around what we do as a service. But I'm mindful this evening that we have a lot of content to get through, with pensions following again, which is a heavy hitting subject. So what I would just like to do is show you that at the end of our presentation, what I have is how to contact us for Westmeath. But also what I've done is I've tried to put in as many useful links as possible for those of you that are happy enough to go surfing. And I've broken them down under what's relevant under citizens information, what's relevant under Teagasc, and what is relevant under the HSE. And also under revenue, and then there's the link for the legislation for the amended act, and then there's a link for the Irish Farmers Association have their own pamphlet around fair deal as well. So that's what I have put together for your presentation this evening. So I'm going to stop sharing now, maybe.
Yeah, thanks very much for that, Deborah. That is a very comprehensive run through the fair deal scheme and the process around it. Just while we're just teeing up the next presentation, I know you're double jobbing, so you're going to be doing that as well. But I just want to hit you with one question, just something that occurred to me, and you hit on it there during your talk about, you know, when do you start that conversation? But specifically about the fair deal process itself, it's HSE administered. But if somebody thinks that this is something that they're going to be requiring in the short term, should they go and make an appointment with their Citizens Information Service first? Where's the first point of contact? I know you said there's a care needs assessment, and that obviously involves, you know, a medical assessment, but the whole financial needs assessment, presumably you and your staff right around the country will take a hands-on approach to helping somebody with that.
We will, of course, and this is a lengthy process. It's not something that you're going to sit down and write up a form in one day and put it in the post. For example, like you say, the care needs assessment has to be done by a medical healthcare professional. The financial assessment will require you to gather up current bank statements, credit union statements, loan statements, asset register, maybe an evaluation by an estate agent or an auctioneer on the cost of the property or the family home, a market value for it. So there's a lot of homework that has to be done in this. What we find when people come into us is they're coming in straight after somebody has had some kind of diagnosis or event or episode, and they want to know, where do I start with all of this? And that's the starting point to come into us. We can talk to you around, this is an option. This is the best way to start the conversation. We'll put a bullet point list of things you need to start getting together. We'll suggest to you, go home, get a folder or a diary and start taking things down. And every time you think of something, write it down, make a note. You're welcome to email back into us or telephone, and we'll go back through it again. We're there for you if you find it difficult to put the financial piece together. And we're there at the end of it when you want us to look over the form. Before it goes anywhere, we'll suggest to you at that stage, keep a copy up everything now in the file, because unfortunately things get misplaced. And it's something we learned during COVID. People had sent in their original documents everywhere, and then offices were abandoned because people were working from home because the pandemic, post was backed up, etc., and things got misplaced. So we would suggest to you that you self-manage that piece like a secretary for yourself and for your family. So we will have that conversation in and out all the time.
And the fact that the network of citizens information offices, like you're right across the country. So I mean, there's one in probably every major town, I think.
Every county has at least one office in it.
Yeah.
And if your audience go on to citizensinformation.ie, on the menu bar in the top right hand side, if they click on that, it'll have find a centre. It brings up a map of Ireland. You get onto that, you find what's convenient for you. And sometimes it might be that, you know, I live in Tullamore, but I work in Athlone. It's easier for me to pop into Athlone. That's fine. We don't mind. Okay. Once you're coming into us, you will get a service.
Okay. That's great. I mean, you shared a lot of links and a lot of information there, and we will put a lot of those up on our own website. So James, maybe you can come in here and maybe show us exactly what information we have up on the teagasc.ie website.
Yeah, so I think my screen, you should be able to see it there now. So I suppose the Teagasc website contains an awful lot of information. So possibly the easiest way to get into the succession page on the Teagasc website is to go to your search engine like Google and type in Teagasc and succession and press enter, and it'll bring you to a link. Click on that link, and when you arrive on that page, you'll find some booklets. We've got the Farm Succession and Transfer Guide that people can use to write a succession plan. We've got a Transfer and the Family Farm Guide book that has 7 chapters covering all different aspects that all of the speakers have covered during the last 3 webinars. There's a number of media articles. There'll be YouTube videos of our webinars also. Deborah mentioned a personal affairs checklist that they use. There's also a link to one on our website. We'll put up the presentations that have been made at all of the webinars, so the slideshows that you've seen, as well as the YouTube video. So you could print off the slides and you could watch the video to go with it again. So, and we'll also have some links. So the page will be updated over the next couple of days. So please do come back and visit us. And if there's something you want to ask, you know, we have a network of offices and advisors around the country if you want to chat to us. In relation to the questions, we've had a lot of questions in on tax tonight and the last night. We're working our way slowly through them. As that's not the topic tonight, we will give you an answer over the next couple of days. So bear with us, but try and keep the questions tonight to the area that Deborah is covering. So that's all I'll say for the minute, and back over to you, Kevin.
Thanks, James. Deborah, I hope you took the opportunity there to wipe your brow and prepare yourself for the next talk. Look, we'll come back. There are a number of questions already in on Fair Deal, and we'll pick them up at the end of the session tonight. Your next presentation and information is going to be more on state supports around pensions and so on, Deborah, isn't that right?
Yes, and before I go into that, I just, because we had budget this week, I just put 2 or 3 slides together just to say what's happening to social welfare from a budget perspective. And I will just put that up.
And just when you're putting that up, I just remind everybody the Q&A tab is at the bottom of your screen there. If you're watching on Zoom, please feel free to click into that and type in your question. It's held in confidence. Nobody else on the webinar can see it. It'll just be seen by ourselves, Deborah and ourselves here. So
okay,
please do that at any stage.
Okay. So just because the budget was yesterday, and I attended a tax briefing this morning, well, a budget briefing this morning by RBK, and I listened to what they were saying about it, and I know that Teagasc will cover this, but I'm not familiar with this area whatsoever. But one of the things they said was about general stock relief extended to 2024, and young trained farmers they extended to 2022, and they talked about a reduction of a VAT flat rate addition as well. So what I can say around is the budget changes for welfare and some of the things that are happening there. One of the good things that happened was the fuel allowance increased by €5, and that came into effect from midnight. Normally we're familiar with the price of cigarettes and petrol and diesel changing at midnight, so this was good to see that they brought it in. Back to school clothing and footwear allowance is increasing. That's not for this year's scheme, so that'll be during summer 2022. The living alone allowance is increasing by €3 per week. That will come into effect in January 2022. The earning limit for people who are in receipt of disability allowance has widened and brought up to 375 per week. There will be a Christmas bonus for people in receipt of social welfare. The date hasn't been set on that yet. It will be early December. The parents' benefit will be extended from 5 to 7 weeks, and the working family payment, or people would still probably refer to that as family income supplement, and that's been increased by €10 across all the family sizes. There are a couple of other things that are happening around GP care. Sorry, that's a typo. It should be free GP care for 6 and 7 year olds. A new dental scheme for medical card holders will be introduced. There is no detail yet around that. The drugs payment scheme threshold has been reduced. It was at 120, then it went to 114 per month capping, and now it's down to 100. That means the people that are on long-term medication won't be paying more than €100 a month for their medication. On the education side of it, the student maintenance grant is being increased. On the tax side of it, the tax rate bands at 40 and 20% don't change, but what is changing is the universal social charge ceiling for the 2% bandwidth. And the reason for that is for people who are in receipt of minimum wage, that they don't find themselves escalating into the higher USC band rates. The other thing that they made an announcement on was that the VAT rate for the hospitality sector would stay at 9% until August of next year, which is good news for them because they've been one of the slowest sectors to reopen due to COVID. Again, I've put in the links where people can get a guide to the budget, our information around it, and the government's press release around the budget. So that will allow people to get extra information on the budget. So that's just a whistle-stop tour through yesterday's budget. I'm going to stop sharing that screen now and start into pensions. And I am pensions. Okay, so I'm going to skip over the first couple of slides, which really focus on who we are as a service, and talk around pensions. And I just need to clear up my screen a little bit. And this is really at an overview level, because for tonight, I just wanted to show you that there is a state pension contributory, which is based on the contributions that our Prsi you have paid during your working time, particularly if you've been on a Class A stamp, and that means that you have been an employee in insurable employment. There is a state pension non-contributory, which means that you have insufficient contributions, or maybe you have more years on credits and you have some means to support yourself, and that's where the Department of Social Protection do a means assessment on you and determine what your level of pension will be. Where there is where you have been widowed, or there is a PRSI based pension available. And then the other one that tends to happen for this age category is that they tend to start taking care for their spouse, and they may find that they are eligible for a carer's payment instead. What you need to do is, when you're making an application for this, current pension age is 66, and you should be applying for your pension 3 months in advance. It takes that long for you to gather up your records, put in the application form, for the application form to be processed and checked, for there to be a check, maybe because you lived abroad or lived and worked abroad for some years before returning to Ireland, or maybe you worked in the civil service and then left on retirement and then went into the workforce as an insured employee, or maybe you set up your own business, so you have a mixture of stamps. So for all of those reasons, it takes some time to gather up your details to make an application. Nowadays, you need to go online to set up a MyGov ID account. And once you create that, then you have access to My Welfare and My Revenue, etc. For those of you that are IT challenged, and that might mean that you actually don't have broadband coverage or broadband in the home, or the digital skills to do it, or you just have a preference not to do it that way, you can still make a request to Donegal, to the PRSI records section, and that's the telephone number there for your ease. And you would need your date of birth, your name, your mother's maiden name, and your PPS number to request that detail. And they will post it out to you. And that could take 2 to 3 weeks, maybe longer now post-COVID. There were plans afoot to change the pension age, and at the minute, COVID did some of us favour because it has stopped at 66. But there are plans to bring it forward to as far as 68. But they are stalled, like I just said. But there is a new commission on welfare and taxation being set up, and there was recently a commission for pensions established, and both of those are going to come together with their outputs and put forward recommendations that will impact the likes of social welfare payments such as state pension, contributory and non-contributory. There's different ways of calculating your pension. So in the past, you took all the number of contributions you had, and you got the yearly average. And now it is working across what's called a total contribution approach. And there was an anomaly some years back there where some people fell under a limit because they were one way of calculation was used. And back in 2018, the department wrote out to all those people and calculated it using the second methodology, and engaged with the people around changes to their personal rate of pension payment. To qualify for the state pension, like I said, you must be 66 or over. You must have contributions at class A, E, H, or S. And A is an insurable employment, and S is self-employed. And those cash contributions are calculated up over the length of time that you have been working. So you must have had 520 weeks of full rate PRSI paid and a yearly average number of contributions. So that's qualifying conditions for the state pension contribution. The rate of payment is €243, and that is where you are hitting the top level contribution rate. Underneath that, there are incremental rates reduced based on your yearly average. And I've included that in a table to show you. So 48 or more is the top rate. If you fall into the bracket of your yearly average of 40 to 47, then your personal rate of payment for the state pension is going to be €243.50. Right down to the basic level of, if you fall into a yearly average of 10 to 14, then you would get a personal rate of €99.20. So that just shows you how it is divided by the department based on your contributions. Under the total contribution approach, what was added in there by the department was the homemaking or home caring credited contributions that allowed people who stayed at home to mind children, or maybe mind a family member that had more than the normal care requirements than the average person. And so they were, in essence, they were home caring, and you could apply for those to be credited contributions for you. And that would change the rate of payment that you got for your yearly average. There is also, for example, if you had a period of time where you were spent in job seeking or maybe illness benefit, those credits can be added in as well into the count for your state pension. So it is always important for people to know that. We see this a lot where people come in and say, I don't want to take anything out of the system. It is very important that you are registered as being active within the system, so that at a minimum you get a credit. If you don't have those credits, then you have long gaps. Those long gaps mightn't mean anything to you in your younger years, but when you get to the age of 66 and you're looking for a pension, those gaps are going to diminish the rate of pension that you possibly were entitled to. So even if you don't have means to support yourself, always register to show that you're either sick or that you're job seeking or some other circumstance has come into play. Maybe you're caring for somebody, so you're not active in the labour market, but that you are registered within the system as being active so that you, at a minimum, get the credit. When you get a state pension, and you have the option to apply for your spouse as a qualified adult, and that then allows you to apply for the qualified adult. They check to see, is that qualified adult working, if they have means of their own. If they are getting earnings of more than 310 euros, you will not get a payment for them. If you're getting less than that, then you will get a payment for them, but it's tapered again. Once you fill in the form and claim for them, and if you both agree, then the qualified adult payment can go directly to your spouse, or it can go directly to the person who's getting the personal rate. It depends on how your own household functions and is set up. This has gone a little bit off screen, so pardon me for that. But here you see like what the social welfare payment type is, and if you're getting a qualified adult, what the rate of it is, if they're under 66 or if they're over 66. And again, if you're on illness or job seekers or something and getting a qualified adult rate, it's at 134.70. What you should also know is that when we move on to the non-contributory pension, where there's means testing applied by the Department of Social Protection, what they typically do is disregard the first 20,000. Then they take the next 20,000 and charge a rate of €1 per thousand per week on it. And then they do the same for the next 10,000, and they calculate it at €2. And then everything after that is at €4 per 1,000. So they will then determine, using that formula, what is the equivalent of your weekly income based on that calculation, based on the assets or savings that you have, or the money that you have. So on the state non-contributory pension, there is a qualified adult rate again for that. And then there's also the option to change or to apply for a qualified child. And the qualified child dependent is set at under 12 years of age, it's €38, and over 12 years of age, it's at €45. And if it's determined by the department that you're only getting a half rate, then you have the rates there applicable. For non-contributory pension, I said it's means tested. It takes into account all income, all savings and assets, any additional property, and any income that maybe you receive through farming. On the widows and widowers or surviving partners contributory pension, the rate of payment is €203 per week. Again, you can apply for a qualified child on it. The rate for under 12 is 38 and over 12 is 45. And that is applicable until you turn 66. And at that stage, then you're moved off that contributory pension onto the state pension. And the department tend to do that automatically. They write out to you a couple of months before you turn 66 and let you know that that is their intention to do that. And they include a calculation so that you can see what the financial impact is of that change. If you are on the widow or widowers, if you remarry or enter a new partnership or start to cohabit, then you rule yourself out of that payment. You're no longer eligible for it. And you are obliged to let social welfare know so that they don't put any penalty or levy on you or charge you for overpayment. The other thing I was mentioning this evening is around voluntary contributions, because they can help maintain your social insurance records and help you qualify for social insurance payments in the future, particularly around the pension area. You can choose to pay them if you're under 66 and you meet another list of conditions that the department have. And if you're working outside the EU and not subject to Irish or EU social contributions, you may also opt to pay voluntary contributions. To be eligible to make the voluntary contributions, you must have a basic amount of contributions paid under compulsory insurance. You must agree to pay the voluntary contributions. You must make the payment through the year from January through to December, and you stop paying voluntary contributions when you reach the age of 66, or you start paying PRSI again. The other thing that we always say to people that are approaching 66 or over 60s is that it's best to come into Citizens Information and get a benefits check. One of the things that we can do is make sure that you're on the right payment at the right time. The other thing we can do is see, are there any secondary benefits that you might be entitled to that would enhance the well-being of the household together. For example, fuel allowance, which I mentioned in the budget piece, or which is paid for 28 weeks of the year. And you can opt to have that as a weekly payment, or you can opt to have it paid in October and again in January, which will help, particularly if you're getting a fill of oil. So you have a bulk payment in twice a year around that. The living alone allowance, which has just gone up by €3. The household benefits package, which has an electricity or gas allowance and the TV license to it. And the electricity allowance is to the value of €35 a month. The gas allowance is the same. Or you might have an entitlement to the telephone support allowance. You might be eligible for a medical card or for free travel, or maybe you should be on the drugs payment scheme or anything like that. That is the, I suppose, unique selling point Citizens Information bring to the table, where we can check all of these with you and ask you, what are you on? What is your circumstance? Have you any conditions? Do you know about this? Do you think you might be eligible? We can give you the forms. We can sit with you and fill out the forms. We can ask you to take away the forms and gather up whatever evidence or accounts, for example, your electricity bill to go with the household benefit package. And then we can invite you back in and say, we'll check everything for you before everything is sent away. And like I said earlier, we can take copies of information for you, send you away with an envelope marked for your own copy, and send on the applications into the department for you. Again, I have put in the useful links around social welfare payments for the older and retired person that cover all of the pensions that might be of interest. I've put in the household benefits. I've put in a link for support for farmers. And that is will be used then, like Kevin and James said earlier, they will move them then onto the Teagasc website as well, and then we will PDF all of these presentations that I did. Some of them might need some final grammar polished onto them, and then they will be available to you as well.
That's great, Deborah.
I am going to stop sharing now.
Yeah, I wouldn't be worrying about polishing the grammar. We understood you perfectly there. That was pretty clear.
Okay.
Just a question, something that kind of always confuses me, and I know farmers in particular kind of find it hard to get their heads around in relation to the state pension, the contributory pension. And I know you covered it in the presentation. You covered it pretty well, but just to emphasize again, what do you mean by a contribution, and how is that done as part of how is a farmer making that contribution to ensure that he or she gets their full pension entitlement when they do retire?
So my understanding is that a farmer is registered as self-employed, so therefore they're paying a Class S stamp, which is qualifier for a state pension. And when they do their returns each year, their returns should balance out how many PRSI weeks are they covering off with it, and that equals their stamps. So normally you would get a record from social welfare revenue to say there were 52. Sometimes you hear there's 50, 51, 52, 53 weeks, the way the 1st of January falls. So what stamp period are you covering in that return? And the Class S stamps would be listed then by year, how many you earned in that year.
As the follow on, Deborah, some farmers have extremely low incomes and may not end up paying tax when they do a tax return. So is there a voluntary PRSI payment that they could make to ensure that they get a contributory pension? Like, I'm sure there are some farmers that haven't paid tax, or their income is low and they mightn't be forced to pay PRSI. Is that something that people need to be careful of, in your view? So
I would say you'd need to be careful of it. It's not something I have huge experience about. I'd have to check that out with the whole PRSI record section in Donegal and ask them for a steer on that. But if it's one of the questions that has come in and you send it on to me, James, it's definitely one I'm quite happy to research and come back with some information on.
Yeah, no, I think it's something that I've come across before, where some farmers have a low income and they don't end up paying tax, and then you're not paying PRSI, so then they won't have the contributions. So, you know, to hit the right number of contributions, you can, I think, make a voluntary PRSI.
Voluntary contribution.
So we might check that out. Yeah, please, Deborah.
I can do that. I'll just take a note of that.
If you mentioned there, I think as well that there's a potential change coming in the way your contributions are going to be assessed. Is that likely to come in soon, or is it in already, or is there a kind of two processes happening side by side? Or
yeah, so back in 2018 and 2019 they had started that whole process. They wrote out to, there was like about 100,000 people that had an anomaly in how their pension had been calculated. They were dealing with them first, and then they were moving through that, and they had a plan then to change the retirement age and move towards the total contribution approach. And then we hit COVID, and that kind of put the brakes on things. So some people are getting assessed side by side using the two methods. But the department are, I understand, going to revisit this because it's a resource issue for them as well. They have it back. To be fair to them, they managed very well during COVID, because they brought out a payment called the pandemic unemployment payment overnight, and rolled that out with a tremendous gusto, and great applause is due to them, because they were very responsive in doing that. But other areas then had to take a back seat, so there have been delays in other things that were due to roll out.
Okay.
I see somebody has asked about citizens information, what kind of service we are. We are a free, confidential, impartial, non-judgmental service. We are running by appointments only at the minute. We are reopening up our services starting over the next 2 weeks, where we'll have drop-in clinics, and those will be noted on the website when their clinics are drop-in only. And we still require people to be masked and follow COVID-19 protocols as well. Okay.
How somebody check their social insurance record? I mean, obviously, citizens information maybe are the point to go to. You mentioned that someone can log in themselves.
Once you're set up with a MyGovID account, you can go into My Welfare and you can look at it. You can also go into Revenue the same every January and get your employment statement summary for the year previous, because now they've stopped doing P60s, for example. So once you have that account set up, then you can go in and do it. I know myself, I lived for a couple of years abroad in Sweden and worked in Sweden and paid it over there. So when I came back, it was one of the things I did was check and see what was my contribution like. And in the middle of it is a couple of years with like as if I had just flatlined or something. But I was actually paying into a Swedish system.
Yeah.
And so when it comes for me to claim my pension, I would be getting a statement from Sweden, and the Department of Social Protection, the pension section, have bilateral agreements with a lot of countries, and where they would look for, well, what did she pay in there, and what are we going to pay her here, etc., and do the calculations that way. And they would have them with the US and Canada and Australia, New Zealand, several countries. So particularly because a lot of the Irish moved abroad and worked abroad and paid into a system somewhere else. So
and
those bilateral agreements come into play.
Yeah, presumably the Brexit is not going to affect that with the UK as well, like, because I know a lot of people and even would be currently kind of working maybe in the north.
Yeah.
And then,
As part of the Brexit agreement, one of the things that was copper fastened down was that bilateral agreement with regards to pensions would remain in place, because surprisingly, we have a huge amount of English citizens that are retired in Ireland. So it's a benefit to both parties, both countries, to sort that. And that's why I say apply 3 months in advance, because if you have a mixed contribution history like I do, and plenty of others do, then you need to get a form from another country and get that paperwork, and none of these things happen overnight.
Okay.
Deborah, if somebody retired a few years ago and they're not on the full rate of pension, and then their spouse is due to retire next year but have all, fully paid up, would a person that retired earlier in that couple and if the qualified adult rate is higher, can they move to that?
Yes, they can. So every time there's a change in circumstance, and this is where I'm saying to you, like, some people seem to think that like a change in circumstance means bad news coming to your door. It doesn't always. The department are actually obliged then, if you have a change in circumstance like that, they will do a calculation for you, and they're obliged to put you on the one that's optimum for you.
Okay. Yeah, I think you mentioned in your presentation, right payment at the right time, that kind of.
This is it. This is it. Yeah.
Yeah. There's another question just in relation to somebody with 521 credits over 30 years. Do they qualify for a full contributory pension, or how does the averaging work? Again, Deborah.
So the averaging, this is where this total contribution approach takes place. Say, for example, I started working at 16 and then I work right through until I'm 66. Then I have a huge number of years that I'm going to have to divide all the contributions by. And maybe I stopped for a couple of years and went to college or went traveling or something like that. Those years are still accounted. So that's why there was anomalies like that. So what I would say to that person is get a full copy of their contribution history for all the years. Apply to Donegal for it, get it, and then bring it into their local CIC, where one of the information officers will sit down and show you the two ways of doing the calculation.
Okay. The household benefits package, is that automatic or is it means tested, or how does that work, Deborah?
I'm stretching out of the picture here because I'm actually just reaching to the windowsill where I printed everything earlier. And just because if you're over 70, okay, then people over 70 can get the household benefit package, but there are some rules that apply for it. Like, you must be resident here, only one person in the house is getting it, the bills must be in your name, so things like that. If you are between 66 and 70, then you must be on one of the qualifying payments. So if you're 66 to 70 on your estate pension, and you are caring or living with somebody in the house, and you meet those conditions, then you make an application for it. Also, if you are widowed and between the age of 60 and 65, then you may qualify for it as well. So there are several terms and conditions with that. But there is a means test with it as well. So, and there's also a means test with fuel allowance, just to say that as well.
Okay, so if somebody is not quite sure if they're entitled to something, maybe gather together their qualifications and give yourselves a ring, and you'll be able to give them a guide.
Yeah.
Yeah, because it's all quite complicated. I don't know how you carry it all around in your head, Deborah.
I'll be finished with this head now in about 20 minutes. It'll be empty then.
You'll only be fit for a lay down after this is over, Deborah, for sure. I just have a couple of questions on fair deal, just to take you back to your earlier talk. What happens in the case where somebody goes into a nursing home and they have their farm rented out or leased out to somebody? So there's income coming in for leasing out the farm, but the farm is still in their possession. Do they get hit on the double? Is the value of the farm assessed as well as the actual rental income as part of the process of deciding what they can contribute?
In that case, they would have to give a sort of a market value or an estimate for the farm, but because they have it rented out, they're not using it, they're not availing of it. So the income that they get is what's going to be assessed. The rental income is what will be assessed.
Okay.
And what can I say about that as well is that if somebody has started the fair deal scheme and that is what they've been calculated on, the clock starts from the day you sign that contract for the fair deal. So even if changes come in afoot next year, they're not going to be applied retrospectively. You are already signed up into a contract for the terms and conditions that prevailed on the day that you signed. They're the ones that you're going to be held to.
Okay. We have a couple of questions then in about the whole, I mean, the new changes that are coming in and some of the new rules, and I know they haven't bedded in yet. It's later this month, so we're still kind of getting to grips of them. But this whole concept of an eligible farm successor, designating somebody as your successor, what's your understanding of what that process will involve, Deborah? Is it going to be, you know, are you going to have to go into a solicitor's office to do that? Is it something that you can sign, you know, at your own kitchen table and be witnessed, or, you know, what's involved in that process?
I expect it will land somewhere in between, Kevin. So there will be some kind of formal document released as part of the package that is going to go with this whole succession planning, and that you would either have to register through, maybe not a solicitor, but if the successor is being registered, that they would have something on a deed, or that they would join in on some agricultural document or arrangement that is in place with maybe the Department of Agriculture or something like that. But it certainly won't be a casual arrangement, and it will certainly be open to scrutiny, where you say this, we can vouch for it starting when it started, and not that you can have a water cooler chat and say, Paddy can say to Tom, Dick and Harry, let's just backdate this. That's not going to work.
Okay. But I suppose the changes that are coming, they're generally good, like for farmers, in that, you know, putting that 3-year cap in place on farm assets, because up to date now, as it stands at the minute, it's kind of open-ended. That 7.5% is, you know, for whatever length of time the person is in the or requires home care.
Yeah.
So presumably the change is good that's coming in. We just have to see the detail on what's going to be, you know, the mechanics of picking out the successor. Just one other question that's come in, and I'll switch back to James then. It's a quick, short, snappy one. What's typically the cost of nursing home care in Ireland?
Yeah, it's very expensive. So like I said at the start of Fair Deal, like a presentation, say for example, the cost of your care per week was going to be 1,000, and you're assessed as having means to pay 300, then the HSE would pay 700. Like 1,000 is not unrealistic, but it is probably seriously undervalued, because the cost, and when I say the cost of Fair Deal covers long-term nursing care, it is literally kind of bed and board and the basic medical aids that you might need in the nursing home. It's not the cost of other services like social activities, like our mass or bingo or day trips or hairdressing or you know, none of that is included in it. So you could add another couple of hundred onto that 1,000 I gave as an example.
Okay. Yeah, pretty big cost. All right, when you start to multiply it up now, it can work into.
It is, and you know, it's like going to a restaurant, ask for a menu and ask for the price list, and decide from the get-go what you want to opt into and opt out of. If somebody is non-verbal, for example, there's no point in them going for singing lessons, or so. Do you know what I mean? But all of those could be bundled in under social activities for the patient. And yes, everybody should have some social inclusion, but pick what is relevant and what is affordable.
Okay.
I suppose, Deborah, with the cost of that, and some people might decide they don't want to go to a nursing home, but sometimes it's just that the family mightn't be able to care for the person depending on their needs. But is it more expensive? I assume it's more expensive if somebody needs round the clock care at home, because you're probably looking at 3 or 4 people coming in and out. So some people, unless there's a big fund of money, you're probably backed into a corner having to go.
And this is where I mentioned, James, those home help hours are really a stepping stone for having that conversation and allowing people all to come to the same realization by their own journey and in their own time. But the other thing is just to say that when the HSE do that care need assessment, they do actually talk to the person around their wishes as well. But there's a whole other presentation that I could have done around home improvement grants and for people who are elderly in their home or maybe have an acquired disability that are run through the local authority, and how you can apply for them to that, so that you can stay with a quality of life for longer in your home before you ever get to a fair deal.
So if somebody is in that situation, they should come and have a chat with you about, what options are there.
These are the options that we go through. Like if you're looking for one of the local authority home improvement grants, you will need to have some kind of OT assessment done by an occupational therapist, or maybe the public health nurse will come and do a home visit and watch you move in your home and see what are the modifications that are needed to make life a little bit easier for you, but you retain your independence as long as you have a support network, maybe of family members around. And that's why I put carers allowance as a payment in on the pension one, because there's normally somebody who steps up and starts the caring process for a family member. While it can be financially expensive to retain somebody in the house for as long as possible, don't forget that it is emotionally expensive and time expensive as well for somebody to provide that level of care.
Yeah. I have a technical question for you, Deborah, in relation to the family home and the fair deal. If there's a decent sized mortgage still outstanding on the property when somebody is going in towards a fair deal, how does all that work? I assume the bank want their pound of flesh back or their payments. So is there there, or how does that work?
Yeah, that's considered in the value in the financial needs assessment. Most people have mortgages on their homes. Even if you get to later in life, there's still some maybe residue that has to be paid off, or maybe they hadn't paid their property tax or something like that. So all of that has to be put in order.
Okay.
And is considered. So the fair deal aren't going to take away from you what you should be paying on the mortgage and then run the risk of the other family members falling into debt or arrears on the mortgage. And then you find yourself in some sort of insolvency situation.
Okay. Yeah, so it all fits into the calculation for.
You have to vouch all of that, so you'd be getting current mortgage statement and what the interest is per year on that mortgage as well, and all of that information has to go in. That's why I'm saying you will need a big huge folder for all of this stuff.
Yeah, there's loads of compliments on your presentation, Deborah, here in the chat, so well done. One question I have in relation to farm family, where the husband and wife are both working on the farm, and one spouse is paying the other spouse a wage and full Prsi contributions. So in that case, do both spouses then get the full contributory pension?
They will both be applying for a pension in their own right, absolutely, when they turn 66.
And let's
sorry, just to finish that, if spouse A applies first and spouse B is being paid the wage from spouse A, and that wage is more than €310, they're not going to get a qualified adult portion to their payment. But if it's less than €310 a week that spouse A is paying spouse B, then they should tick the box to say, I'm applying for qualified adult, and they will get a tapered or reduced rate for their qualified adult.
Okay, so if a young farming couple are setting out and it's going to be a busy farm, and the two of them are acquired, they should, if the income is there allowed to make payments, they should both make payments, is what you're saying, Deborah. So that
absolutely, yeah. They're both doing the work, I won't go down the road of equality, etc. But if you're doing an honest day's work for an honest day's pay, then you should be getting a contribution for it. Unless it's something advised by an independent financial advisor that is more beneficial for them to do. But they should be thinking long term. You need to think, what if there's an accident on the farm? What if I'm widowed? What happens to all the contributions? What if I retire and live to 80s like my parents do, and they are still planning their retirement?
Just one thing that comes up just in relation to that, Deborah, that whole topic of spouses. What about the case where a spouse, was working off farm for a period and then ceased work to go back, maybe mind children or get involved in the farm, and so their contribution history off the farm is, there's a huge gap there, and then when the time comes then for pension age, they find that they're being badly affected from the point of view of the level of pension that they have. Is there any way the entitlements of a spouse that wasn't involved wasn't paid as an employee on the farm, is there any way that they can tap into their husband or wife's contribution history to improve their pension entitlements as a result?
Yeah, that type of scenario will most likely go forward for non-contributory means assessment pension.
Okay, so the contributory pension there's no way they can tap into, say, using a partnership agreement?
They would be either go on qualified adult for their contributory spouse, or else they will go into a means assessment non-contributory pension, or sadly they will go into widower's pension.
Okay.
And when they go into that, if their spouse is fully paid up contributions, that's why they would qualify for that pension. Okay. They would be taking over their contributions.
And when you're into the means tested, I presume it's all means that's coming into the house, so it could
everything, stocks, shares, bonds. I mean, when you see the application form, it asks you, have you property or land anywhere else, any kind of assets, stocks, shares, prize bonds, jewelry, artwork, vintage cars, motorbikes, vintage farming machines, anything that is considered an asset. And you are obliged to make that declaration up front. And anything that you sell on or move out of their way, the department will call that transference out of reach, and it could disqualify you from a payment and leave you with a charge against you for fraudulently claiming a payment or a pension.
Okay. Just another question, sorry, James, another question just in relation to Fair Deal. Does it cover home help at all, or sorry, home care? It doesn't cover home care.
No, the home care is separate, but the care need report might link you into that.
Okay.
So it would be like a referral protocol really through the local health centre, where they would say, look, I did as a medical practitioner, I did this assessment, I've determined this. They may not be ready for a long-term nursing home care yet, but they definitely could avail of supports in the family home to assist them, and they would have to start that conversation.
Okay.
Yeah, it's like a referral really.
Deborah, I have a short question and a long question. One is, what age do I apply for the contributory pension?
3 months before your 66th birthday.
And the long question is, where a farmer had leased part of his farm to his child, and he ended up, he was farming himself. So himself and his child are both farming separately, but he ended up needing to go to the nursing home. Suddenly he's in the nursing home for the last 6 years. The child is still farming the leased land, but they're also farming their father's farm also. So how will that work when it comes to?
Was that as a casual arrangement, or it was that's just how it happened? I suppose what I'd be saying there is that if they're in a nursing home for the last 6 years, then you have sufficient evidence to show that you are the successor here and you have been doing this for this period of time. You would get a report to show his date of entry, and you would do an affidavit yourself to say, I, Paddy Murphy, say that I have been farming this land since my father entered into the nursing home, and that's the arrangement that's in place.
Okay, so if the child is farming the father's land in their place, that covers that bit. But what happens if there's an official stamped lease between the parent and child in relation to the land that the child is farming? Would that be seen as leased out land and treated differently? Or is that seen as a succession?
It was probably seen as a source of income as part of the financial assessment when he entered into Fair Deal.
Okay, yeah.
And because that hasn't changed, if the assumption is there that the child is still paying for the rental,
Yeah,
then the circumstances haven't changed. If the child stopped paying for the rental, then the circumstances have changed and there should have been a reassessment.
Okay. Yeah, so it's a tricky one. Yeah.
It is. And I would say proceed with caution, but don't be an ostrich and stick your head in the sand either and think that if I can't see it, nobody else can see it.
So it might be worth that person's file coming in to have.
I would say that they should explore it with not just with citizens' information, but maybe with the likes of yourselves, that would have a better understanding of how this land and rental work first, and explore it that way.
Yeah. In terms of the 5-year rule, assets that are gifted out within the 5 years, that look back, how is that figured out?
They're still looked at, so just watch for that, and watch for any kind of capital gains tax that might apply. And if you're doing something as a gift, you can I can gift to my child up to 3,000 in a financial tax year without there being any kind of tax implication for them. So, and I would say that this is a gift. I would register it as being a gift from A to B, so just watch for that.
Okay. Have you anything there, Kevin? Do you want to ask?
Oh, I'd say we're nearly at the end of it. There's still other questions there, but we're not going to get to them all. Look, I don't want to let it roll on for too much longer because we're getting close to 9 o'clock. Look at Deborah. Thanks very much for both the talks that you gave tonight. You delivered a hell of a lot of information. And we'll, as we said earlier, we'll put the presentations and the materials and the links that you provided will all go up on the website. Thanks for the way you dealt with the questions as well. As you said yourself, this is a very complex area, and I mean it's a testament, I think, to the knowledge that you have and the information you have at your disposal in this information. You're definitely a one-stop shop for all that stuff, and I mean you should be complimented on the type of service you deliver, and you have offices in every county in Ireland, so people should go on the website and find their local office, and don't be afraid to go in and tap into that source of information. So thanks very much, Deborah, for all the information, and thanks to James and all the people behind the scenes that helped make tonight possible. We would expect that next year, around this time next year, we'll be back on the road again. Normal service will have resumed, and the transfer and the farm clinics hosted by Teagasc will be face-to-face affairs. We'll be doing less by webinar and more kind of sitting across the table, which is kind of the way we prefer to do business anyway. Although the webinar format, I think, has worked out particularly well over the last couple of years in terms of getting information across. As I said, we'll update the Teagasc website with all the links and the recording of tonight's. There's a good few people have sent in comments that when is the recording going to be available or where it's going to be available. It'll be up on the Teagasc YouTube channel, and you can also look back at last week's talks on succession mediation and on the legal side, and look back on last year's presentations that I mentioned earlier. Look, thanks very much, everybody that tuned in tonight and for contributing such great questions. And I said we'll try and get back to you on answers that any of the questions that we didn't actually deal with on the webinar. We hope that you found the last couple of weeks' events useful. And with that, I'd say good night, everybody. Good night.